Louise Bedford here, the Money Chick and the host of the Talking Trading podcast. This is the weekly podcast for traders who want to create real wealth from the share market. This week, I'm interviewing Mark Dugmore. He has gone from rocks to riches. He's a geologist. You're going to love his story. Not only has he had a stellar year learning about the markets via my mentor program, but he has gone from a standing start to earning over 90% in returns from the markets in less than 1 year. I love this because he has applied every level of discipline. He has applied good risk management strategies, and he is focused so that he can change the very trajectory of his life. Mark loves travel. He loves fishing. He loves making an impact on the world, and you're going to hear exactly how he plans to do this, not just this year. Remember, this is a ripple effect into the future. You're going to want to share this episode with the people that you care for. We talk about his trading plan and some of the improvements he needs to make. I make 5 suggestions and you'll hear Mark's impressions of those suggestions. And while we're going through that part of the interview, I want you to apply those suggestions to your own trading plan. And if you don't have a trading plan, you need to pick up my trading plan template from tradinggame.com.au. I give you my own trading plan template for free to help you excel in the markets. What are some of the suggestions that I'm making in this show that you can apply to your own trading plan? Which of those 5 areas that I mentioned do you need to actually up your level in your plan so that it is specific, it deals with your trading psychology and your risk management, and so that you can get ready for stellar returns the way that Mark has achieved? It is an exceptional interview and you're going to draw so much inspiration from Mark. So let's cut to it. Mark Dugmore, welcome to Talking Trading. I've got so many things that I want to ask you. I'd love to hear a little bit more about your background and what brought you into the trading arena.
Yeah, I'm very happy to be here, actually. I'm a geologist by trade, specialising in hard rock geology as opposed to soft rock geology. So I was into minerals rather than oil or gas or coal. And distinctly mineral exploration from mining, they're 2 very different things. And I started my career with a major resources company in the field, worked my way up through the corporate ladder and led an exploration department at the global level at one point. Then decided the corporate world wasn't for me, worked in the junior mining space, have actually listed some companies on the ASX before. But now I'm the owner-founder of my mineral exploration business, just as I'm the owner-founder of my trading business, actually. So it goes hand in hand. I have a passion for the natural resources space. I have a very itchy brain, Louise. I have an insatiable curiosity. I like to embrace the thrill of the unknown, the thrill of the hunt and discovery, because mineral exploration and markets are a bit analogous, and there's a lot of unknown out there, so I have to embrace that. I've speculated a bit in the past. Being a geologist, I've followed some value investing techniques, but the program that yourself and Chris run really appealed to me because of the structure and discipline that I could apply to natural resources and commodities. And, mineral exploration is a bit like trading. You have a budget. You can only drill a certain number of holes. You have a system on where to place your holes, and then the resource gods, it's up to them to look after the rest.
Yeah, exactly. I do love so many of the points that you've raised here. One of them is that trading is a business. So approach it like a business person and you'll get much further ahead. And secondly, a lot of the things that we've done in our past not necessarily loan itself exactly towards trading, but in terms of that growth mindset, it can make all the difference. So staying open and being aware that there's still learning to be had, and being able to use a mentor to be able to stimulate that direction all big ticks. Now, Mark, you have had a spectacular year, 90% return so far. Now, I know this is why people want to find out more about what you've done so that they can also think of their own portfolio, look at what they've achieved. Now, we're not saying that 90% is the goal. And I want you to know that if you're not up to 90% return in a year, that there's nothing wrong with that. So please, let's draw from Mark information and inspiration. This is not designed to say that you have to achieve this straight after you've done our mentor program. This is something that is designed to give you inspiration. So now that I've cleared that away, give us exactly what you did and how you did it. I'd love to know the key drivers behind your performance, and I'd love to know what areas you focused on.
No, thanks, Louise. Look, it has been a good year, an exceptional year, really. I started your program early this year, 2025, and I bought some legacy positions in for the year that weren't 100% resources with what I wanted to focus on. And in early to mid 2024, I really wanted to get into it, and I recognised the gold price moving, So and I wasn't going to waste this bull market, that was one of my themes. Don't waste a bull market, And your program just gave me the tools to open up, the whole resources sector and commodities. I was attracted to the commodities, and it was a disciplined way to look at those. And there's no doubt that one of the key drivers has been the rise in the precious metals, silver and gold, which I have exposure to, but also platinum. Look, I am concentrated, but that's where the market's led me. Some of the scans through the year have led me into those positions as well. I have 11 positions in resource companies and equities and 2 positions in commodities, silver and gold. But I followed the system built during your program, and that allowed me to exit some non-resource positions early in the year when we had that pullback in March, April, I think it was. Those positions just hit their stops and I got out. Then as the market came back, I filled it with resource stocks. I've had some windfall profits along the way. So there's some that have gone absolutely bat-fink crazy. You used a different word, but bat-fink's a good way. Selling a third of the stock when it's just gone up like a skyrocket, So I think I've had 2 or 3 of those this year, which has also helped. Pretty much stuck to the plan that I created, haven't deviated. Like I said, I sold out when stop losses were hit using your stop loss formula, and I've pyramided, and that was something that I've not done before, adding to positions as they're going really well, and that's really helped the positions as well. But one thing I'd like to summarise was the process over outcome, and I read an article on Lane Beachley this week. I don't know if you remember Lane at all. She won 7 world surfing titles, so women titles. And Lane said that the first and the last of her surfing titles were love-based, in that she focused on the process. But the 5 titles in between were based on fear, and the whole joy was sucked out because she was focused on the outcome. So you can win from both process and outcome, but your mindset's going to be in a better place when you're focusing on the process over the outcome.
So, Mark, let's walk the person listening to the podcast through your trading plan. What are the core systems and rules that you've developed and used?
Firstly, Louise, I identified what values and beliefs were important to me, and that guides how I trade. And for instance, well-being and health and fitness is very important to me. And I think as a trader, you've got to untether yourself from the screen and get out there and do something else. So that's very important. Discovery and creativity were 2 other things very important to me, and of course, freedom and independence. So that sort of drives how I live my life and also how I trade. And the strategy is a playing to win strategy. There's a fellow called Roger Martin, and he has a fantastic playing to win strategy rather than the old core values mission system. And it's about, what's your winning aspiration? And for me, it's about being the best trader I can be, with also one eye on a financial amount that gets you that financial freedom. Where you're going to play, how you're going to win, what are your capabilities, and what are your systems. And so leading into that, I've got my money management rules, which ask myself the question, how do I stay in the game long enough to win is really what that's all about. And where do you invest your capital in a particular methodology? So I look at 2 different time frames, 3 actually. Well, firstly, with equities, I look at it on a weekly basis. So I'm looking at weekly charts. For the commodities, I started on a 4-hourly basis, but that's a bit like having your left leg tethered to the computer all day. So I went to daily, actually, which is a bit more sociable. And from an exposure point of view, 70% of my capital is in equities, 30% in commodities. Open positions, I currently have 13, 2 equities, 2 commodities, but I can have up to 15. Then I look at how much is available for position sizing, and I look at how much cash I have, and the equity in my open positions only up to the value of their stops, because I'm not going to use the market's money. It's just my money, so don't sort of count your chickens before they hatch sort of thing. And then how much will I risk on any one trade? And I use a 0.5% rule, and I think we'll deal with that in a bit more detail down the track. On an allocation point of view, it's mostly the ASX resource companies that I look at. The UK markets also. I do have some North American positions, but not terribly socially acceptable time frame, And the commodities that trade on my time frame are good. I look at the price range and bang for buck, not ASX 300 stocks, not ones that have already run. I'm looking for ones that can really, really run from maybe a 25 cents to $5 sort of range. And I don't bet the farm, no more than a quarter of my capital than any one stock. And then pyramiding, of course, is key. Portfolio heat, no more than 5% of my capital open to risk at any one time. And an anti-martingale strategy. So if I'm winning, then I'll put more into the stock. If I'm losing, I'll put less. So it varies a little bit. So they're my money management rules. And from a risk management point of view, I've got an on-off switch. So if the market is below a certain metric measured by the All Ords, I don't trade. And a liquidity risk, I've got to make sure that when everyone's heading for the exits, I can run out the exit with them too, so there's a number there. And there is a sector risk position in my plan, but really I'm just in the commodities and materials sector anyway. So I'm more of a bottom-up type fisher than a top-down looking at particular markets. And then there's my trading system itself. So entry, exit, position size, pyramid rules, windfall, profit. What do I do if I get a string of losses? I have a few properties as well which are looking to be liquidated, and there's an ETS strategy in there ready for that to take up some of those funds. So that's pretty handy, actually. Yep, rubbing the hands together. And the plan's also having the confidence of managing money coming in like that in a large amount, just not small amounts either. And then I have a discipline management system, what I do on a daily, weekly, monthly, or even quarterly basis, and then how to measure my performance, which is less on monetary performance and more on whether I adhere to my plan. Did I follow my plan? But then, of course, are you making money? So with this year being a good year, I am going to pull out a little bit for a small celebration. I think there's a European holiday in the offing, Louise. I might use about 5% of that. I mean, I've spent a lot of my life on aeroplanes, and I don't care if I get on another airplane, but my wife would love a holiday, and I can see hot chocolate and apple strudel coming up somewhere in Europe.
Absolutely. I think we do have to remember the reason why we're applying this discipline is so that we can have that making money out of thin air feel. If we can keep on creating that type of lifestyle, not only are we happier, but the people that we care for, they're happier as well. Now, you've mentioned quite a few areas there that somebody who hasn't done my mentor program will be confused with. And if that is you listening to this podcast right now, just know that everything Mark has achieved has been done in a very abbreviated time frame. We're talking just a few short months, and then he's talking like a professional trader. So don't give yourself the excuse that if you don't understand it right now, that you will never understand it, because that is not the way to keep that open mind. So Mark, I'm loving it. Your plan had a lot of detailed how-tos. As you know, I went through your trading plan, and I am going to provide some critique on that in this episode. But I want you to answer me this. How has having such a detailed trading plan helped you? And what are some of the challenges that you've faced in trying to implement that plan day to day?
It's true, Louise, that I created probably the funk and wagnalls of a trading plan, for for some listeners, they might not know what that is, but it was more of a workbook than a plan, But I documented the essential concepts from the program. I had a lot of charts, a lot of worked examples, and it was quite a comprehensive document to refer to when needed. Too much, really. But for me, it was like a relearning experience, transforming the messages and learnings on the forum into a document like that. So I was sort of doing it twice. And so that sort of reinforced the language. And there's a lot of language here that was foreign to me and will be foreign to a lot of listeners as well. But that's exactly what you learn. And making that big book, The Funk and Wagners, was key. So in its first two iterations, it was way too long and more of a hindrance in times of when I needed it quickly for a quick referral. And the third rendition in prep will be a more of a ready reckoner when I can look at something in a hurry.
I think with a lot of traders, because they're trying to convert all of their knowledge onto paper so that they don't forget, they often start with a very long plan. But then as you get more experienced in the market, you can make some abbreviations, and it can end up being a lovely document of under 20 pages, maybe even 5 pages for some people. And that is a good aim. It has to be as detailed as it needs to be to cover the scenarios that you're going to place yourself into. And risk management is such an important aspect for traders, and it's a big part of your approach. Did you ever feel out of control with trying to manage your positions? Because it's one thing to achieve 90% return in under a year, but it's another thing to feel comfortable and safe and knowing that you have got that on lock. Tell me how you feel about risk management and perhaps tick off some of the major components that you are applying.
From a feeling point of view, it's a bit daunting to know that the best way to win is to fail by cutting your losses. It's just not a thing that the human brain really accepts, So that can take a little bit of getting used to, especially for brand new traders. So that was one of the mindset hurdles to get over. But really, you have to think about it from a point of view of each trade is just one little dot along a whole sequence of dots, and it just contributes such a small amount to the overall success. So you just have to think of it as a small pinprick at a time and just get on with it, So it's about a decision-making process, and that was how I treated it. From a position sizing point of view, how much are you going to bet on any single position? Because that's important from a mindset point of view too, I use a fractional position size allocating, so only about 0.5% of my capital is allocated to a trade at any one time. So what that means is that I'm willing to completely lose my capital permanently on that trade of 0.5%. So let's say I'm using $100,000 as a total capital. I'm willing to lose $500 on that particular trade. And once that's set, it's in your plan. You don't try not to think about it. That's just part of the business of doing business. And that's the distance from the entry point to the stop. And then there are various calculations like using a price volatility to come up with the exit point and how many dollars you put into the investment. Even for different time frames, the weekly versus the 4 hourly. Like with commodities, I had a 4 hourly time frame to risk size, and I could control a lot of product with using that time frame, and had a close exit trigger. But it was crowding out my capital. I was just taking up too much. So there's diversification there on time frames as well with your risk management.
So you're diversifying across time frames, across universes, so where you're trading. You're diversifying across sectors when opportunities come up that aren't in your main wheelhouse, which is commodities. So I think this is something that everyone needs to consider as a trader. We don't want to just rest on one particular strategy, even if it has worked in the past, because the markets can change. So the diversification across instruments is interesting as well, because that does give you other options. I always find with my full-time traders that if they can conquer 3 different universes and at least 2 different time frames, that is their longevity in the markets. Now, Mark, you've built in some very strong routines, some habits. They're daily, weekly, quarterly habits. I want to delve more into this. What are these types of habits, and how have these structures helped keep you consistent?
I think the routines, Louise, give you a rhythm, just sort of, rolling on rather than stop-start, and it's about structure and not just drifting. And I do a morning blog now. I've never been a diary writer much other than recording how many hours I made to bill somebody on an invoice, So your morning blog suggestion was really good. I do it religiously now. I just write for 3 pages or 15 minutes and, reflect on ideas that come overnight. You wake up in the morning, you've been dreaming about a particular chart overnight or an idea, and so you document that. It's just a good cathartic experience, but it's good for recalibrating on a daily routine, keeps your mindset and your system and your strategy aligned with what you want to do. I also have a trading journal specifically for every individual trade, and it's just a 1-page thing. It's a template where I record how I've entered, the reason for entry, or if I've exited, was it a good exit? Did I follow my plan? How was I feeling at the time? I've got a mood indicator and a wellness indicator, just a few emojis to tick and whatnot. Also on a daily basis, I'll just check the overnight markets, indices and stops. And then I go to a weekly frame as well. So on a weekend, after the markets have closed, get onto Beyond Charts and do a scan. Check the open positions, your alerts, your stops, and then scan for new entries. And even if my portfolio is full at the moment, even if I don't need to fill one in, just do the scan and grab a cup of tea and look at a chart anyway, go through the charts. It's good therapy on a Saturday or a Sunday morning. And then on a monthly basis, I'll look at my performance and the equity curve and how my position sizes are going for the next quarter. So there's a sort of a daily, weekly, monthly routine there that I follow.
I like that. One of the routines that I do suggest people follow is that anti-martingale approach that you mentioned earlier. And that can be done on a quarterly basis where you add up the positions that you have to their stops, how much money have you got in those positions, add that to the cash that you've got available to trade, and that new figure becomes the figure for your future position sizes. Now, you don't want to do it every day because it's too twitchy, but once a quarter is a good sequence so that you can feed that into your new position sizing. What it means is if you're going absolutely beautifully with the markets, you're in tune, it's almost like the markets are reading your mind, then your position sizes will grow. And if you're out of sync with the markets, your position sizes will decrease. Now, I'd like to put you on the spot, Mark. You're a very open person. So from a mentoring perspective, you know that I have pored over your plan. I have got some specific suggestions. So I would like to make those suggestions, and for the person listening to this, for them to go through their own plan in their own mind and see whether you've ticked these off. So I'm going to make the suggestion and I'd love your thoughts, and those 5 areas will be covered, and I'm sure this is going to drive some improvements into your plan. Firstly, I know that I gave you a little bit of a hard time, my friend, but it was for your own good, about the length of your plan. To create something that is that long, when you're under pressure, it is very difficult to find the area that you're looking for. Even though you had an index in there, you aren't going to be taking in new information. You're going to be going, oh my gosh, something's happening in the market. Here we go. It's the first time I've faced this. And every part of you is not going to be taking in logic. So I know that you were very open to this after I'd explained that. And we were looking at for you to create a shorter execution ready version of your plan. Give me some feedback on that. How have you been going with that thought process, and where are you up to with that?
That's good. Thanks for the performance review, Louise. It was good feedback. So I'm not down to a dozen pages yet. I've started the process. So what I've done, my original plan was many, many pages long. It had appendices, figures, how-tos, work examples, introduction, summary, blah, blah, blah. So now I've actually peeled off a lot of that into different sections, different documents, in fact. So I've just got a figures document and a work examples and definitions and so on. And the plan is to roll that into a brief number of words on about 12 pages. And then I'll know exactly on which page I have to go to if the world turns to pudding and I've got to do a ready reckoner pretty quickly. Well, then I know that in 12 pages I can find the answer pretty quickly.
One of the areas that I was concerned with in your plan is looking at your lifestyle, where you do have a demanding day role outside of trading. I queried whether your timeframes that you were looking to trade were a good lifestyle fit, because if we've got jobs and we've already got a cash flow coming in, then sometimes shorter term trading is more just for kicks or entertainment compared with an actual trading discipline or a need. So I did query you on that, fitting your lifestyle to the time frame of your trading, and in especially specific terms, that 4-hour commodity check that you're doing. I was concerned that that may not fit in with your life. Give me some feedback on where you've come to after I gave you that feedback.
It was good feedback. The focus on the weekly equities strategy was fine because that's easily manageable on a weekend, even quickly through the day if you have to manage your stock. But the 4-hourly commodity focus had my left leg to the computer, as I said, and you're glued to the screen, and it's difficult if you've got out of office commitments because it's not always good on a phone to trade. I prefer the big screen, fat fingers and so on. So you're better off if you can do that. So, if you're visiting a drill rig or even if you're fishing on a Friday in the boat, it's difficult on a 4-hourly basis, because I found myself at 8 a.m, at 12 p.m, 4 p.m, and 8 p.m adjusting stops, so that has pulled back the time. So now I'm migrating to a daily time frame for the commodity. So that's helped a lot, actually.
One of the things that I like with the structured way you're applying yourself to the markets is that you're looking to see how are you tracking in terms of your rules. So how are you adhering to your rules? Now, one of the things that I suggested is that you actually track that in your records physically, so that you can look back and see, did you actually tick that off, that every rule was applied and used by you, and how did that make you feel emotionally? This is a part of almost scientific exploration into our own introspective nature, so that we can drive self-improvements into our own trading. Now, how did that sit with you, Mark? And what have you decided to do on the basis of that feedback?
Yeah, no, that's pretty good. Although with being such a good year, I haven't had that many stops or exits, to really to assess. There's a few, but I'm interested to see whether there's any correlation between mood and trade outcome. For instance, don't trade angry or the fear of missing out, or whether you're tired or not feeling very well. So I have, like I said, I have 6 simple emojis in my daily record sheet that I can eventually plot up maybe after 20 or 30 trades and see whether there's any correlation between mood and the outcome. So basically it's then follow the rules. Did I enter into a breakout trade as per what I said I was going to do? Does the chart look like my archetype? Various other rules that I can tick off quite clearly, because those rules are stated in my plan. So I'm looking forward to, after 20, 30 trades to revisit that.
And there is an aspect called affective realism. And what it is when we're in a mood tunnel of euphoria, it's like everything's amazing. The blue sky is so blue, the grass is so green, and every trade looks like a good idea. Whereas if we're in the mood tunnel of the opposite, where we're feeling like, somber, and we're annoyed with everybody, then unfortunately there's no trade that looks good at all. So as a trader, we're trying to get that pendulum swinging from left to right, as we do because we're humans, and to be in the middle so that we don't have euphoria or depression on our side as a trader. Now, the other thing that I asked you to do is to look out for correlated exposures so that you don't end up too heavily invested in one particular area. Tell me your thoughts.
No, that's also good advice. I'm conscious that I'm highly concentrated in the precious metals. It's by no accident, by the way. I really wanted to go onto that powerful thematic, but it does amplify my risks, so I am conscious of it. And I've put in another couple of positions that are, for instance, silver and platinum and gold can be highly correlated. So I have some copper and potash as well, which sort of don't counterbalance, but they're a little bit different, so it's not all in one particular thematic. But it just means that I have to be hyper vigilant on making sure my stops on all those positions are right up to where they should be in case it all goes at once, because it all could go at once with the correlation like that.
And the thing is not to hang on. So once the tide changes, because I don't actually believe that somebody should have a fully diversified portfolio with like 20% in precious metals and, not a prescribed level of diversification. I do think, though, that we have to be careful as traders not to grasp, not to grip, not to hang on when the tide has changed. So it's good that we're talking about this because it will allow you to realise that sometimes the tide can change. And the final thing that I suggested for your trading plan was that you practice trial runs of different scenarios. So in particular, with pyramiding, with GSLOs, guaranteed stop loss orders. Now, how did you go with practicing trial runs of pyramiding and trial runs of these scenarios before you implement it?
No, that was also good advice. So with my pyramiding, with my initial positions, I use my own cash. With my pyramiding, I use contracts for different CFDs, which means there's probably I'm only using a 5% margin to get in. And so I use a guaranteed stop loss order. So I pay for that. It means that when I exit, the number that I want to exit on is guaranteed, but I pay for it. But I went straight into pyramiding. I didn't really practice. I was sort of confident of my GSLOs. But having said that, I've gone back into my demo account, Louise, and just loaded up a heap of GSLO practices and one was hit yesterday, so I was confident that it was working, but I've gone back and done it retrospectively.
Everything that you've said here is definitely showing that you have got the ability to drive more improvements into your plan, as we all do. So I think it is something that we all need to be aware of. I want to talk more about trading psychology because it is a key area, how you're thinking, how you're improving your own mindset. It plays a massive role in your plan, and I was very pleased to see that. How have you managed fear and discipline and confidence when things don't quite go as expected?
Yeah, I think from a fear point of view, you've got your rituals and your daily routines. I think when you stick to that rhythm, you don't eliminate fear, but you can try and mitigate it, if you know what I mean. So when there's chaos, that's when fear thrives, So if you can have some sort of structure and discipline, then that alleviates the fear and it gives you the confidence to act out of knowing what to do, not just out of emotion. And the system that we learnt during the program enabled me to feel in control, not in control of the market. You can never control the market, but just how you react or engage with the market just gives you the confidence. And it comes down to following the rules basically in your plan.
Yeah, it really does. I think that rule adherence is so important. I want to talk more about your lifestyle goals. Having a clear purpose as a trader, knowing what you're heading for, that is such a motivating, energy-oriented force. So you love fishing, you love travel, and I know financial freedom is a real core. Tell me about these in relation to the mentor program. What was your life before and what was your life after the mentor program with the way that you're thinking about these goals?
The structure provided through the mentor program, like I said before, really gives you the confidence that you can manage a serious amount of money. That was one of the things that came home to me. I mean, I like what I do in a job as a geologist, and I will keep going, but the funding that comes through my trading can either feed into that business or ultimately it's building up the nest egg to continue on my trading business, because that's what will happen when the drill rigs stop turning and the wage and salary goes away and you're not earning money, but you're creating money. So that's what the financial freedom is. It's all about that choice. And, it's about insurance as well, Louise. The country's becoming increasingly expensive. You have to, I think, build up a serious nest egg to ward that off. And the trading system's portable. You can take it on a skiing journey, which is in the offering in the new year, and hot chocolate and apple strudel while checking the gold price might be the way to go, I think. And fishing is my meditation. It's where I get grounded, and there's always more fishing to do, and fish the nation's estuaries. So it's a good balance. That's what I'm aiming for with my lifestyle.
And if you had one piece of advice for the trader listening, particularly a new trader, what is something that you wish you had have known before you got rolling with all of this? Give me the lowdown about what would you say to somebody if they were saying, I think this could be an area for me to get into?
Always learn something new, Louise. If you don't grow, you die, So don't put off learning how to trade. Go towards the challenge, be unafraid, and the mentor program was fantastic for this. I loved it for that reason.
Awesome. So until next week, happy trading.